first scope we'll be covering is sales and occurrence receivable, that we tested the mistake sequences of our invoices and reconciled the sales ledger against our bank's receipt. Turning to our specific finding, we identified a gap in our documentation. Specifically, invoice number 150504 and 150505 is completely missing from our sales list. This represents an unreconciled gap in our sequential ledger. Moving to the second point from our finding in this scope is that we identify several misclassifications within our primary ledger. Firstly, receipt notes 1504 was mistakenly recorded under Emily's, whereas should attributed to Hamel, and invoice 150501 belongs to Charlie Lee is posted incorrectly to Hamel ledger. This cross-attribution suggests a need for tighter manual entry verification. Beyond misclassification, we also find a duplicate invoice, which is invoice 150502, appear twice in sales ledger. And lastly, document notes 120602 was omitted from our bad debt provision ledger. This will be lead to overstated on our current asset and make our financial statement are not accurate.
I will present the audit findings and outstanding issue for the purchases and account payables of Bubble Syndrome Berhad. So for the first finding is existence. For the existent assertion, we examine 5 supply invoices amounting to 171,000 ringgit. All transactions were supported by valid document sources and confirmed as genuine purchases. No fictitious transactions were identified and no outstanding issues were noted. And the second one is accuracy. For accuracy, we reconcile the supply invoices with the general ledger and account payables record. The total purchases of 271,000 ringgit were correctly recorded with no material mistake found. Therefore, no outstanding issues were identified. The third one is cut-off. For cut-off, we review transactions around the year end to ensure proper period recognition. All purchases were recorded in the correct financial year. No cut-off error were identified and no outstanding issues were noted. The fourth one is completeness. For completeness, all supply invoices were traced to the accounting records and no missing transactions were found. However, we noted that purchase order and good receipt notes were not available for some transactions, indicating weak documentation control. Okay, the last one is presentation and disclosure. For presentation and disclosure, purchases and account payable were properly classified in the financial statement. However, an inconsistency in inventory balance was identified and required further investigation and correction. In conclusion, the audit found that purchases and account payable cycle is generally fairly stated. However, improvements are needed in documentation control and inventory inconsistency. Thank you.
Moving into the core findings, the audit of a salary cycle identifies several critical errors. First, the salary recorded in the financial statement amounted to 24,000 ringgit, representing a net monthly payment of 2,000 ringgit. After deduction of our EPF, 300 ringgit, and social 15 ringgit. Because the statutory deductions were not properly separated, the true gross salary expense is understated by 3,780 ringgit. Secondly, regarding part-time labor, 1,500 ringgit in wages for Abu were included, supported by petty cash voucher PCV 15/04 and PCV 15/05. However, the recording is inconsistent as these wages were mixed with the unrated petty cash items like stationery and renovations, which weakens the clarity of payroll reporting.
Thirdly, such contributions were incorrectly recorded, while payment voucher PV150528 currently shows a contribution of 360 ringgit split between employer and employee portions. The financial statement only reflects this amount for the entire year, resulting in a significant gap from the actual RM4320 annual obligations. Fourthly, the EPF ledger AC9090/000 is currently overstated by 7,200 ringgit because the amount was posted twice on the 20 December 2024 using preference PV150528 and PV150529. Finally, the salary ledger contains redundant entries and uses vouchers numbers such as PV150502 and PV150504 that do not match the actual vouchers issued, creating a weakened audit trail.
Office renovation of RM 5100 was wrongly expensed and must be reclassified as a fixed asset in SOFP. Depreciation vehicle was incorrectly recorded at RM 12,400 when the correct amount should have been RM 14,400. The adjustment must to have record the additional RM 2,000 depreciation to correct the understatement of expenses and ensure both SOCI and SOP are fairly presented. In addition, the license fee was duplicated at RM 24,000 in the ledger compared to RM 12,000 in the SOCI, and accrued expenses of RM 500 were not recorded. The adjustment required reverse to duplicate RM 12,000 and recognize RM 500 as both expenses and accrual. Electricity expenses for October to December amounting to RM 800 were not recorded, and water expenses for the same period totally RM 3,000 were also omitted. This must be recognized together with accrual to reflect outstanding liabilities.
The first finding we found in the cash and bank balances recycle is the significant increase in the bank balance. We found that the bank balance increased from 60,000 to 184,540 ringgit during the year. However, there was no sufficient explanation or supporting documents to justify this increase. The second finding is unauthorized cash transactions. We found that several cash transactions were not approved by the authorized person, Mr. Thomas. This increases the risk of fraud and weakens the company's internal control. Our third finding is missing or incorrect supporting documents. Some of the documents provided did not match the transactions recorded in the ledgers. Because of this, we could not verify whether the transactions were valid. The fourth finding is a duplicate payment. We identified one payment that was made twice. This shows weaknesses in the company's payment process and may result in unnecessary financial losses. The final finding is the petty cash discrepancy. The petty cash balance was recorded as 26,070, but based on the petty cash vouchers, the correct balance should be 23,070. This means the petty cash balance was overstated by 3,000 ringgit.